Hello everyone, welcome to today's session. In today's YouTube session, we're going to talk about the top three missing deductions for business owners. Right. Before we go to the main content, a very quick declaration. The information provided is for general guidance only. We recommend consulting an experienced tax advisor or planner before making any decisions. Okay, so um, business owners often miss out on many valuable deductions. Okay, in this session, we'll focus on the top three deductions to save time. Yeah, because there are so many. But of course, at the end of today's session, we'll briefly touch base on other commonly overlooked deductions as well. Right. All right, the first one, actually all the top three we listed here, 99% out of all our new clients would have at least one missing from their last accountants, or they just didn't know, have no idea that they can claim this type of deductions before. Okay, so the first one is office meals and refreshments. Generally speaking, they are classified as entertainment, and once they do, they are not deductible. They're not tax deductible. Okay, but if you look into the fine writing, okay, this screenshot is directly coming from ATO website. Okay, so the question will be when you classify meals as entertainment, before you do that, you should ask yourself the question, are they really entertainment and not deductible? Okay, look at the requirements. So there are four questions you need to ask yourself. Why, what, when, and where. So why they provided, what type of food or drink are provided, and the time they're provided, and where the location they're provided. Okay, so most of the situation, maybe more than 90% of the meals you provided to yourself or your employees could be office meals. Then they will become deductible and not entertainment. Okay, recently we had a new client who had $10,000, okay, more than $10,000 that's classified as entertainment in the last year's return. But when we drill into every single transaction, they were all office meals, okay, and fully deductible. Okay, so of course it's making a big difference. All right, that's the top one. Okay, second one, minor benefit exemption. So employee benefits valued at less than $300 per instance may be deductible for the business and tax exempt for employees. So in practice, how can we do it? So say for an example, as even that's including business owners as well. So you can actually give an employee a gift card, for example, $280, Meyer gift card. Your employee can use the gift card to go to Meyer and buy some private items like private clothing. Okay, and then this $280, provided if it's eligible, is fully tax deductible for the business. Okay, so of course, this includes benefit provided to business owners and their family members who are employees. Okay, and this type of benefits can be offered multiple times throughout the year as well. Of course, the related requirements are complicated, so you do need to talk to an experienced tax advisor similar to us, okay, to understand how in reality how to utilize this. And then I've added a small note here. This can serve as a tax-free incentive to attract and retain employees. As we already know, the cost of living is increasing so quickly at the moment. And then this is actually an effective way for employers and employees work together, save tax. All right. And then you can actually give your employees, it's almost like a tax-free benefit. So an effective increase on their pay rate, okay, when they don't need to pay tax. All right, so you could potentially use this as another benefit, tax-free benefit to retain your employees. All right, okay. The third one, travel allowance. Employees traveling for business trips can be paid a fixed rate as daily allowance. If the daily allowance is below the ATO cap, the full amount is deductible for the business without the need for receipts or invoices. It happens a lot when, especially business owners, when they travel for business, they might not have time or have the energy when they're really busy, okay, to keep all the receipts for the meals. For sometimes they might go to supermarket to buy a bottle of water, and then do they keep every single receipt? It's time consuming to put all the receipts together to claim reimbursement as well. So this is actually an effective way, an easier way as well. Okay, so also as long as you have incurred the expenses, you don't even have to have a valid tax invoice. Tax office would mostly ask you, okay, do you have or did you incur the expenses and how you have incurred the expenses? As long as you have incurred the expenses, you can convince them. You don't have to provide any written evidence, okay, any receipt. Of course, there are other requirements. Make sure you talk to an experienced tax advisor in this area. All right, so that's the top three. And of course, there are so many other common missing deductions. Okay, overtime meal allowance, that's applicable for eligible industries or occupations. Similar to travel allowance, is actually there's fixed rate for per meal, per overtime meal. So provided if you're not over, you can actually provide the benefit to employees. Employees will take it as the tax-free benefit, and then you can claim a deduction for the business. Okay, of course, they have to have incurred the cost, but they don't have to provide receipts or invoice. All right. And then electric car purchase. So it's fully exempt, fully tax exempt under specific conditions. Okay. On the type of the car. And then also have to be purchased under the business or by the employer. Okay. Of course, you need to be aware of the other requirements, the GST cap, luxury car cap, and then make sure you are meeting other eligibility requirements too. That's motor vehicle related. And also APT reportable benefit. Okay, or you have to report and then back because that could potentially impact on your Centrelink payment or your other type of tax payment, like health debt repayment or so it's another complicated area. Yeah. All right. And then next one, employees under 18. Yeah, it actually happens a lot when we have clients. Okay, they might be a restaurant and then they have teenagers helping out in the family business. Okay, they might be under 18. So when an family member, employees under 18, they can still potentially have the $18,200 tax-free threshold. Okay, so when we talk about the penalty tax rate for minors, on the $416, okay, that's only on passive income. If they do actively working to earn an income, that's actually their employment income, the tax-free threshold still apply to them. Okay. Or also next one, home office expenses include both occupancy and operating costs. This is one of the most common deductions that some business owners could be missing because when they work from home on the hourly rate, they can claim potentially on the operating cost. If they use a certain area, one room in the house, they can potentially claim occupancy costs, interest on the loan, council rates, depreciation of the property. Of course, there are other layers of requirements, and then you need to know how to avoid capital gains tax in the future. So there are other tips and tricks related to home office expenses as well. All right. And then next one, occupational health. So essentially deductions for health, fitness, and related expenses. Super contributions, potential deductions for children employees, savings for their first home. Okay, we actually did another YouTube session recently. Yeah, make sure you watch that session. Of course, for the business owners, super is actually a big gold mine, okay, for people who are in maybe late 40s or in their 50s. Okay, make sure you understand how to utilize super to save your tax. Okay, when you reach retirement age, yeah, it's actually one of the biggest tax benefit. Yeah, if you don't know how to do it, make sure you talk to us or talk to someone who's experienced. Okay. Next one, travel for medical treatment. So expenses related to obtaining necessary medical care. That's also deductible for the employer, and employee can take the benefit tax-free. Compassionate travel, so travel costs incurred for compassionate reasons may be deductible as well. That's all also under FBT exempt benefits. All right, so there are a lot. We can't list everything. There are many other common missing deductions as well. So if you're interested, yeah, talk to us. Of course, deductions is only a part of the tax savings. Okay. If you want to have really effective tax planning to maximize your tax savings, you got to consider your business structure. Business structure and tailored strategies depend on your, your family group, how many family members you have, um, their age. So all of that can be combined into consideration. Yeah, every family group, every business could be different. Yeah, you have to utilize all the strategies that's going to be the best for yourself. Okay. And also, um, yeah, because everyone, what we do is we actually customize for every single business client. We understand what they do, and then everyone will be unique. Yeah, you have situations that's different from other people. All right. So we actually have more than 50 planning strategies. We pick and choose for where every client, every business client. So if you're interested, find out how much value we can help you to add, book a free consultation with us. Okay, the first 30 minutes will be 100% free and no strings attached. All right. So we can give you a little bit more details and then give you something to take away. You know, what's going to be the best strategies for your family business. All right. And my um, here is a brief introduction about myself and also our contact details. So give us a call, send me an email if you have any questions. Yeah, also, if you're interested to book a first session, let me know as well. All right, thank you so much, and we'll talk to you in our next YouTube session.